Good morning. This is Connor from 0DTE Traders here to present the week ahead for June 2nd, 2025. In this video, we'll highlight upcoming events, market structure, SPX levels, and volatility dynamics. Let's dive in. On the economic front, it's jobs week featuring JOLTS, ADP employment data, and the highly anticipated non-farm payrolls report on Friday. The ISM reports are also on slate with the manufacturing PMI due out this morning at 10 o'clock. It's going to be a big week for economic data. On the earnings calendar, reports are expected from CrowdStrike, Hewlett Packard Enterprises, and Broadcom. The trade war is heating up again with high potential for more headline making developments this week. Recently, Trump on Truth Social, China violated its agreement with the US. US is planning broader tech sanctions on China, including a crackdown on subsidiaries. Trump also said he will double US steel and aluminum tariffs from 25% to 50% effective June 4th. So keep your news feed up, remain vigilant. I'm sure we'll have more headlines in coming days and weeks. In regards to the S&P 500 market regime, the Gamma Index, which tracks dealer gamma exposure, is positive, 240 million notional, trading in close proximity to the 58.95 flip. As you can see, all strikes above positive, that is supportive for the market price. All strikes below negative, that is destabilizing for the market price. Last week, we saw continuous reversion to this 5,900 transition zone. And this is largely a function of the JP Morgan short call strike at 59.05, invoking that mean reversion price action. And this was largely our base case last week that the market may be entering a transition phase, potentially leading to choppy, unpredictable price action. Obviously, that played out here, but we are due for that next directional move. If we look at the SPX 4-hour chart, we're coiling up here. We have this downsloping structure connecting the highs from last week, and then the large macro upsloping structure, 1 test, 2 test, 3 test, 4 test. So we're primed for volatility expansion. We're primed for that next directional move. Is it going to be up? Is it going to be down? I don't know. We're 0DTE traders, so we're not necessarily predicting that, but it's likely going to be driven by some sort of catalyst. And as highlighted, there is a lot going on here this week. In regards to the SPX gamma levels, we are seeing some changes week over week, notably 59.25, which was net negative last week. That put gamma has been removed, making 59.25 now net positive, which essentially reduces the strength of overhead resistance. So if we can reclaim 59.25, it opens the door to 59.50, 59.67, and then the big call wall zone at 6,060.10. As you can see, 6,000 is the most dominant strike on here. It is regarded as the upper bound. There is some call wall candidates, notably 6,100. So if we do see a shift higher in that metric, it would most certainly be a bullish indication. As far as the downside goes, we're finally seeing some established put gamma strikes, notably 5,800, and then the put wall at 5,700. Variance is minimal. Just to give you a different visual, this is the SPX on the 15-minute chart. We can see the sloping structures in yellow. 59.25 more or less correlates with that downsloping structure. A break would be a bullish indication. Potential target 59.67. This was the high from a couple weeks ago. A break opens the door to that call wall zone. Transition zone, you can see here, there's just a concentration of levels, a big gamma strike, SPX flip, SPY flip, that JP Morgan. This is deemed fair value transition. Below opens the door to 59.50. This was basically the low from last week, most certainly the low from on Friday. A break would imply continuation on the downside, a rather large gap here. Fill 58.03, which more or less correlates with the big 5,800 handle. Below that is another large gap from about 57.69 to about 56.58. So two big gaps on the downside. Also note this small gap here on the upside from about 59.53 to 59.63. Turning to volatility, there remains potential for feedback loops. Remember, rate of change is much more important than the VIX level. So keep an eye on trending type price action, velocity, and levels, right? Utilize these in tandem with your SPX levels, confirming or denying pivot points, particularly on trending days. These are our VIX levels here. You can go ahead and mark those on your chart. Now, this week, as we highlighted, tons of catalysts. So if it turns out to be positive, non-events, continued volatility compression would support upside. However, if fear is triggered, a rebid in volatility could quickly drive prices lower. But overall, here in summary, echoing our view from last week, positioning and volatility remain more neutral than imbalanced. Keep in mind that the data levels dynamics that we're highlighting in this video can change day over day. So if you're a member, it's important to go over to our dashboard, review the key metrics and updated levels every morning, and make sure you get the newest script for our custom indicator that automatically draws all these levels on your chart for you. Additionally, see our updated notes and our gamma charts. They're available for the SPX, SPY, along with volatility charts, all the information you need to trade the S&P 500. Lastly, I want to mention that we started a new daily strategy, the Iron Condor, with the unique risk management approach. We've taken a total of 3 trades thus far and logged 3 winners. On Wednesday, Thursday, and Friday, expired worthless, full premium collected, up 130,000 on the year, 86% win rate. Of course, this is not all the Iron Condor. This is also includes our process, other setups, and option strategies. But in regards to that Iron Condor, we did conduct a back test, and it does look very promising over time. This is the Monte Carlo simulation with average expected value of $47 per contract. So we're going to continue to trade this. It is somewhat mechanical, but we do, as mentioned, have a unique way of managing risk on it. So if you're curious about the Iron Condor and a repeatable strategy, you want access to our analysis, our data on a daily basis, now is a great time to get started. Use code Iron Condor at checkout and receive 20% off. Offer is valid until June 6, 2025. Hope to have you on the team, and best of luck this week.